Hi everyone. All right, Tyson here. I'm going to show you guys how I day traded today. It's very simple, it's very easy. We're going to be day trading micro ES futures. We're going to be day trading essentially the price of the S&P 500 today. And I'm using regular trading hours. Show you guys where that's at here, right down here. Regular trading hours, not extended trading hours. And I'm going to be trading the New York session today. It starts at 9:30 a.m. New York time, and it starts at 10:30 a.m. my local time. And we have one indicator on the charts, our VWAP line. It's basically unadjusted. Here are the settings for it. Pretty straightforward, pretty simple. So this was a really textbook day of day trading using my favorite setup, a continuation setup. And I'm going to show you guys exactly how it went down. There's a lot of very fundamental things to learn here about day trading using the setup. Very easy to grasp. So with that being said, we start off on the 5-minute time frame every single day as the New York session opens. I'm going to take my rectangle tool here, and I like to draw a box over the first 3 5-minute candles that print. And the box is going to be as high as the tallest wick out of those 3 candles and as low as the lowest wick. So these are those 3 candles. This is what the box looks like, and we're going to call this our opening range. And then we want to start watching price as it develops into this box, and we want to wait until price breaks out of either the top or the bottom of the box. Today it happens on the top, and price closes its candle bodies outside of the box to really confirm that it's broken out of the top. That's how we want to keep track of that. So since today it breaks out of the top of the box, the first thing that I'm expecting is I want to see price continue on upwards, and we are going to trade price continuing in that direction. So that's why I call it a continuation setup or continuation trade. In this case, we're going to be looking for a continuation long to the upside because price broke above the box, printed some candle bodies up there, and price is also above the VWAP line as well. So those are our 2 bullish indicators that price is moving upwards. Now, when it comes to continuation setup, the first thing that we need is we need for price, once it breaks out of this box, to pull back. We need price to retrace back down so that it can continue moving on up. For a pullback, I'd like to see 2 consecutive candles in the opposite direction, so we get that right here. So this is our pullback. 2 consecutive bearish candles in the opposite direction. And after we get a pullback, we want to see what I call a confirmation candle. Confirmation candle is a large, powerful candle that's giving us a big, flashing, obvious sign that price is going to be continuing upwards. And it usually has a pretty full candle body and fairly small wicks, especially in one direction. And I'll explain. So after we get our valid pullback down back into the opening range, we get this bullish candle here. It's a bullish candle that tells us that bullish pressure is there because before the candle closes, it pushes the candle body all the way back up in a hurry before the candle closes and creates this large wick, very little wick at the top of the candle, and a pretty full candle body up there. But this candle didn't close outside or above the opening range, so we can't enter a trade if price is still within this opening range box. We need for a price to have a candle body close outside of the opening range. This next bullish candle that we get, we don't want to look at this as a confirmation candle. This is a very non-powerful candle that is screaming that it doesn't have the confidence to continue on moving up. And we know that because before the candle closed, it left this large wick here where the candle body shrunk back down. Yes, it closed outside of the opening range, but it's just not large and powerful enough for us to consider that a confirmation candle. So here I stay patient. I don't enter any trades when a lot of people might certainly attempt to. So I stay patient. And sure enough, right after that candle closes, price moves in the opposite direction like 12 points. So right away, that was not a good candle to enter. So I'm still just waiting for a confirmation candle, and then boom, we finally get exactly what a confirmation candle is supposed to look like. A large, bullish candle to the upside. It's a candle that's larger than the previous candle that just printed, so it's a bullish engulfing candle, fairly small wicks on the top and bottom, and a large full candle body, and it closes outside the opening range. This is what a confirmation candle looks like, not this. And so all it took was a little bit of patience, and I like to enter this trade as the candle closes. So I take my long position tool, I enter the trade as the candle closes, and then I take my stop loss, I pull it to the bottom of the pullback, which is 11 3/4 points. Take my take profit, I pull it up to make it a 1 risk to reward ratio trade. This is the only type of trade size that I trade, is a 1 risk to reward ratio, where both the take profit and the stop loss are the same size. And didn't even have to use any risk management today in this trade. It went directly from entry to winner. A little bit of a buffer later in the trade before it actually took profit, but it was a good solid trade and it came away with a win today. So that's really about it, guys. That's how I day traded today, and I'll see you guys all tomorrow if another setup occurs. Thanks for watching.